Yo, what's up, Darius? Texas is great. How are you doing? I love it. It's starting to get really hot down here, but it's really good. I just got my first shot of the Pfizer vaccine on Friday, so I've been a little out of it for a little bit, but I'm feeling better now, and I got to go back and get my second shot on May 28th, so about 2.5 weeks from Friday. Hey Ken, how's it going? Just had some ideas I wanted to share as I was thinking today. So I thought I'd go live and talk about that stuff and just get your guys' feedback on it as well. But we'll wait for more people to join the stream and then we'll get started here in just a little bit. I always have these random ideas, but I feel like it's always good to, bounce them off you guys and see what you think. Because, um, what was I going to say? Yeah, a lot of people have, a lot of stocks that they're always either emailing me or DMing me on Instagram or saying that I should check out in the Discord. And while I might not be able to always invest into um, those companies because we can only spread ourselves so thin, right? It might be something that I can still do a little bit of dive and deep dive and research on it and give my own take on the company and what I think about it, even though I'm not investing in it. So that's what I want to do with stocks you pick. And I'll probably be a little redundant here because I want to wait for everyone to join the stream to get that idea across. But I also do want to talk about covered calls today. As far as TBLT, um, what's next, in my opinion, is we're just waiting for the business model to actually, garner more investor attention. Feel like it's a very off the radar thing. It's a penny stock. When the market kind of took its dip, a lot of people um, abandoned it, which is fine. I still have my shares in that company and I'm patiently waiting because for me, it was a long term investment. But yeah, I feel like it's going to take a lot of time for everything as far as TBLT to just materialize. But I was actually thinking about it today as well, and I was like, this is probably, and obviously I'm not giving financial advice or anything, just sharing my experience and what I think. But in my opinion, I was looking at it, I'm like, this might be a good time to double down on my position with the stock being down. Do you think cryptocurrency is a pyramid scheme? So in the last video I uploaded, which is where I had that meeting with um that nice group of women who started a podcast called The Voice of Many. They kind of asked me what do I think about cryptocurrency, and I basically answered the question in there as well, but I'll answer it again for anyone who hasn't seen it. Um, the difference between cryptocurrency and stocks at a very high level is that when you buy a stock, you're buying a business which hopefully has underlying fundamentals. Which, for example, Apple sells iPhones, and they obviously have a very um, big product line. So it's not just iPhones, but to simplify things, Apple sells iPhones. Every phone they sell directly impacts revenue. When you buy cryptocurrency, in my opinion, and also at a very high level, it's all a confidence game. um, there's not necessarily always the underlying fundamentals to drive the price. What drives the price is really just people buying in to that specific digital asset. For example, Dogecoin. I feel like the movement in price was widely driven by FOMO. Last week, when I talked about Doge, and I said it was up like 400 something percent. Also in that podcast, um, I believe that I said what I feel like is driving the price is FOMO. A lot of people were waiting for like Elon Musk on SNL, and I've even talked to like a lot of my friends about Dogecoin in specifically. um, they were some of them were in it as well, and they were waiting for it to really take off after like that Saturday Night Live. Granted, they got in very early, so they've already made good profits. So if you're watching this, I'm not talking about you, but There were also a lot of people who were like, "Oh my, this guy's making this much off of Dogecoin. It's time for me to hop in," and we kind of saw it plummet. So really, what I think about when it comes to something like that, for instance, is um, it's not really an investment. There's a lot of people who were in Dogecoin that don't necessarily know what it is or what it does, and I'll be 100% honest and transparent. I don't know too much about Dogecoin, and I never really cared to understand it really. I don't believe that it has the same value that something like a Bitcoin or Ethereum has. Um, for the only one I'm in right now, I've been in Ethereum as well. I got out a little bit too early, which is whatever, but I'm in Bitcoin. I sold out at like 60,000, got back in at 56,000. Initially, I bought in at 9,000. I believe Bitcoin has that scarcity effect. And with the scarcity effect of Bitcoin, it's just saying that every 4 years there's a halving. So there's a limited supply, and the supply is decreasing. And then as supply um, decreases, there's also a lot of more and more people are getting introduced to Bitcoin and really what it stands for and what it offers. And to me, that's an inflation hedge, a hedge against the current financial system. Um, and that can one day prove to show like fundamental value in Bitcoin, which a lot of these other coins don't have. A lot of these things are coming out of nowhere, and there's a lot of movement in price. But what's to justify that movement in price is really the most important thing, and a lot of these coins don't have that. So, do I think cryptocurrency is a pyramid scheme? Not at all. I also believe that crypto has its place uh, in a portfolio. A lot of people disagree with that, especially a lot of, hyper traditionalist. Um, you know, Warren Buffett is not a crypto guy. He doesn't believe in it. He's likely never going to buy it. Charlie Munger calls crypto pretty much trash. So, depending on who you ask, it really depends. I don't think to throw every cryptocurrency in a bucket to say that it's a scam makes sense when Bitcoin has been the best performing asset, including stocks. And because, like, when we say stocks, we're talking about stocks as a whole, not just one individual stock that may have shot up like 4,000% that nobody knows about. Crypto's been the best performing asset over the past 5 years. So, we can't just call it a scam. There's more and more believers in it. A company like Tesla, if they're putting a portion of their balance sheet in it, uh you know over the long run it may fail, but I think it has its place for now. And that's my take on crypto. Hey, Vanessa from the Voice of Many podcast, how are you doing today? You guys check out the Voice of Many podcast. I put in 36 more shares for Neo while it's down today. That's smart. That's the best thing to do when a stock is down. You want to buy it. When it's up, you want to kind of, proceed with caution, because you don't want to be that person that um, buys in at the top. And if you are, I mean, then you just better have a longer time frame. I'm doing good. Thank you, Vanessa. What's up with tech? You know, last year, and I fall into this category as well. So I'm not just talking about myself. I mean, and I fall into this category as well. So I'm not just, referring to other people. I'm referring to myself as well. Everybody was really big on tech and growth stocks. They had a massive run in 2020. Value stocks, dividend stocks, things that aren't as attractive these days just weren't popular for investors these days. So um, dividend stocks and value stocks have actually outperformed tech stocks, but there's always going to be these rotations in the market. The market's very cyclical. So tech stocks will have their day again. It's just not really getting too emotional about it and understanding that, hey, tech stocks aren't doing so hot right now. If something's not, there's this old saying in the stock market, uh, buy the rumor, sell the news. um, so I believe that tech stocks will come back. They'll be super hot again one day. Eventually, there will be another rotation. They'll and in the past decade or so, they've outperformed value stocks by a whole. So it's just, not always being in the hot thing when it's hot. Hi, Yolanda. How are you doing today? Yolanda as well from the Voice of Many podcast. Um, I used to live in Arkansas. In the summer, it gets super humid. Yeah, it does. Down here in Texas, it's starting to get really hot as well. So lots of AC, lots of staying hydrated, drinking your water. But what I wanted to talk about today was covered calls. A lot of people don't necessarily know that this is a tool that they can use to actually hedge their portfolio. You don't necessarily have to time the stock market. You don't have to jump in and out. So basically with covered calls, for example, that's something that I've been using for quite some time now to make money whether the stock goes up or down. It's an option strategy, and I'm not talking about buying calls. I'm not talking about buying puts, buying options. I'm talking about selling the options. Selling options against the shares that you already have. That's why it's called a covered call. Two companies that I've been doing this very heavily in, or three actually, I'll reach out to you. Two companies or three companies I've been doing this very heavy in are Clover Health, Neo, because that is my biggest position, and Yushin. So last week in Yushin, I actually made $1,500 worth of premium just by selling covered calls, and I reinvested that money into back some of it back into Yushin, some of it into Clover Health, just to make sure that I'm diversified a little bit as far as how I'm investing. And I'm not the most diversified person. I have about seven companies that I watch or seven investments that I watch if you want to include crypto as well. A lot of people will feel like they have to have like 20 companies in their portfolio to feel like they're diversified. I'm someone who's a little bit more compact with how I invest because it can be hard to keep up with all that if you're picking individual stocks. ETFs, that's diversification for you. But back to covered calls because I digress a little bit. So basically, first I want to define what is an option. An option, it gives you the right to buy a certain amount of shares at a certain price by a certain time. Why options investing is more risk on than typically just buying a stock is because with the stock, there's no time decay. And what do I mean with time decay? So I said an option is the right to buy a certain stock at a certain price by a certain time. So it's a contract, right? As you get closer to that date, it loses time value. So this is what we call extrinsic value. If it's May 10th right now, and obviously this isn't going to be applicable because options contracts expire on Fridays, but if it's May 10th right now and there's a contract that expires on May 11th, that's not going to be as worth as much as it was when you first got it, unless that option is in the money. And when we say in the money, that means that it is at or above your strike price in the case of calls. So, one thing with stocks is that time value is not necessarily a thing. If I buy a stock for $5 and that stock drops to $2.50, I'm not worried about, oh, it needs to be at this price by like May 11th or May 12th or whatever it is. I can wait as long as I want to wait for the company to turn around, for things to happen. With the option, it's literally like this is going to expire worthless. So you can blow your entire investment. And that's why like options are another thing that definitely have their time and place, but it shouldn't be the only way that you're investing, in my opinion. At least it's never going to be the only way that I'm investing. The main way that I invest is buying, holding. Sometimes I get out and get back in, but it's not something that I do frequently. When I talk about trading, when I talk about making trades, it's options trades. It's selling covered calls. So like I said, I sold 69 contracts um worth of Yushin. And by the way, one contract entitles you to the right to buy 100 shares. So every 100 shares that you have, you can sell one contract. And as the option seller of a covered call, that is basically you shorting the stock, you shorting the company. You're not directly shorting it. You just don't want it to hit the strike price by that certain day. Because if it doesn't, you get to keep all of that premium. For example, let's say, well, I'll actually give you guys a real world scenario. So I sold May 21st, and don't make an options move just because I'm making it. Just think of me as some guy on the internet. But so I sold 69 contracts worth of Yushin when the stock was over $3 for May 21st for $4. So me as a seller of that contract, the guy who's buying it is expecting, if because if you're selling, someone's buying. The guy who's buying it is expecting that to hit $4 or over and be in the money, and then that gives him the option of, either exercising it and using that contract or selling off the contract to someone else who wants to exercise it. Me as a seller, I don't want Yushin to hit $4 by May 21st. If Yushin doesn't hit $4 by May 21st, and I've already invested the 1500 that I made back then, I get to keep that entire 1500. If it does, guess what? I still get to keep the entire 1500, but um I have to sell him that 69 contracts worth of shares at $4. Guess what? We haven't seen Yushin at $4. So either way, this is a win-win strategy for me because you're going to pay me $4 for all of those shares, which hasn't come about yet. So either way, I'm profiting on it. If it doesn't hit that amount and it doesn't get exercised, that contract expires worthless. And best case scenario here, I get to keep the entire 1500. So this is how a lot of people use covered calls and option strategy um to really create more income for themselves. And Ken says too many variables. It can really seem like a lot at first as you start to get into it. But it is really something that I feel like is a very valuable tool. And I was actually introduced to this by my guy Terrence in the Discord. So it's really been helpful. It's been able to help me like magnify my buying power, my investing power, and really get more shares of whatever I was looking for. So that's why I wanted to bring this concept up, because I noticed that a lot of people can get very and we this happens to me as well. We all get emotional on we don't see the stock going up when we're not in the green, and that's the normal psychological reaction. But if you're making money when the stock is going down or up, and if the stock's going down and you're selling covered calls and that gives you extra money to buy more when the stock is going down and average down, um, I feel like that kind of takes a little bit of the burn off. And it does, and that's what a hedge is called. It's hedging your investments, hedging your portfolio, but also taking, and cover calls is the most conservative trading strategy. It's not hopping in and out of a stock at certain prices, which can guarantee that you realize a loss. One thing to be careful with is that it can lead to a taxable event. So let's say that, we bought Neo last year, 2 years ago, then we actually want to, and we want to keep that as long as possible. Or no, actually, let me rephrase this. Let's say we bought Neo less than a year ago, but a year is coming up as far as we've had it. You're going to pay less taxes holding a stock for over a year, long-term capital gains tax as opposed to short-term capital gains tax. So with covered calls, if you get exercised out of your position, that leads to a taxable event. All of a sudden, you might make profit on the stock selling your covered call, but now all of a sudden you have to pay taxes on that. So that's another thing to keep in mind. A lot of people, they just watch the value of their portfolio. They don't think about the tax game, which is something that's really important for building and conserving wealth, in my opinion. But basically, that was it on covered calls. Just wanted to run that by you, be a little bit more transparent about the moves that I'm making on a weekly, bi-weekly basis as far as it comes to, these three stocks, Yushin, Clover Health, Neo. Someone mentioned TBLT, and I did want to circle back on that because TBLT does not have any options available. So to me, as an investor right now, I feel like, yeah, the price is low. I can average down, but it would just be a buy and hold type of thing. It isn't really something that's too equitable from an options perspective. And then as far as like, I was thinking about investing in Tesla as well. And the reason that I didn't invest in Tesla is because I can't buy. I mean, I no, there's no way I can buy 100 shares of Tesla right now. Stock price is too high. But imagine if you got into Tesla early, the premium on Tesla shares is extremely high. So, one thing that I think about when investing in a company is also, how much premium can I get if I want to sell calls? How can I hedge my portfolio around stuff like that? So, I wanted to just shed some light on covered calls and be more transparent about how I trade because um covered calls is really the most conservative way to trade, which is what a lot of people say. But it's not just easy money. You don't want that stock to hit the strike price, and really you never know when a stock is going to take out. So it's really just, and you can always it's not just like set in stone that you sold a covered call. You can also take a loss to ensure that you don't get exercised out of your position, which can save you a lot of money in taxes by preventing a taxable event. So there's a lot of things to think about when it comes to that. And there's a lot of variables, like you say. But as the share price goes up, the premium on those covered calls are going to be worth more. So, like I said, I sold those Yushin calls, got $1,500 worth of premium when it was over $3. Now, if we take a look at it, you probably won't make the same amount. So, when people are getting euphoric, when the stock price is really running, I feel like that's the best time to sell covered calls, in my opinion. Um, So that was all I wanted to talk about. Let me know if you have any questions on that. I'll pause for 2 minutes, and then I'll talk about the stocks you pick series, which is something that I want to start doing next week. But any questions on covered calls? Okay, no questions there. So the next thing I wanted to talk about, didn't want to be on here too long. Looks like we're at 23 minutes so far. Super long day today, by the way, at work. A lot of technology issues, had a lot of meetings that I couldn't get to. So that's how my day has been going so far. Um, yeah, the stocks you pick series. A lot of you guys say, "Hey, Obi, what's your take on this stock? What's your take on this stock? Or would you invest in this? What do you think about this?" And realistically, you know, no one person in this world knows everything about every stock. And I try to know things about, the companies that more so pertain to me. Because it doesn't really help at all to know a lot of stuff about like companies that I'm not invested in. Like there could be a bunch of stuff going on at Amazon per se. You'll probably never see me buy Amazon shares, and it's not to say that it's not a good business. But there's other things that are more interesting to me right now. Amazon share price, you pay a premium for. So um, there's also up and coming companies. I like to kind of keep my portfolio pretty compressed, if you will, and invest in things that I feel like I can keep up with, one, but also not spread myself too thin. Also, just like have more conviction in what I do have conviction in, but take more calculated bets in that sense. If I'm buying a little bit of this and a little bit of that and a little bit of that, when it takes off, then it's like I don't make that much money off of the stock. So I like to keep my portfolio compressed. So the idea that I just had was the stocks you pick series. For example, in the Discord, a lot of people have been telling me like, Obi, you need to check out ABML. It's a great company. There's so much interest in that stock that in the Discord that it's actually got its own section now. And I really still don't know much about the company. So the stocks you pick series is something that I want to do on a weekly basis where whatever stock is most popular, where whatever we're getting the most buzz about, whatever you guys feel like needs to be the conversation needs to be had, where I can do a quick, analysis of the company, do a little bit of research on it, quickly put together my 2 cents, skim through the financials, skim through how everything's been going, and just really come on YouTube and say if and tell you guys if I think it makes sense or not. And that's what I want the stocks you pick series to be. Just something where stocks that I'm not necessarily invested in, and I'll be fully transparent on whether I hold a position in the company or not, can just have a little bit more coverage. And then you never know, it might be something where we're talking about it and then eventually I'm like, I really like this company. It's time to pull the trigger on this one, or just rebalance my portfolio into some investments like that. So that's what I wanted the stocks you pick series to be like, and hopefully that'll be something that you guys enjoy. I'll see if there's a way for me to set up kind of like a page or something where you guys can just like submit requests on ticker symbols or something like that, or maybe it'll just be one of those things where you leave a comment on whatever video and I go through the comments and I say, okay, this stock's been getting a lot of traction, let me talk about this company and basically just give my view on it. But yeah, that's pretty much all that I wanted to touch on today. I hope that was pretty helpful. Tomorrow, another video will be dropping. We'll see what's pretty nice to talk about, and we'll get into it. So that's gonna be it. Thank you guys for tuning in. If you have any questions about like the stocks you pick series or any stocks that you feel like I need to check out for that, just leave me a comment below, or I'll hang out for a minute and answer any questions about anything really. I lost a lot on a 3x leverage stock. Now it's why I keep away from those. I'm not even sure what three times leverage. Um, so like when you say a three times leverage stock, um, it might be like a ETF that you're referring to. So there's like leverage ETFs, there's inverse leverage ETFs. So I know there's like the S&P 500 bear or something like that. Um, 2x daily, 3x daily. So 3x daily would be like if that if the S&P, it's basically just betting that the S&P is going down and you have three times leverage on that. And then on top of that, leverage ETFs do have time decay as well because their backbones are options. So those are stuff to be really careful with. Um, S SPXU is also another negative ETF. So those are really for, I don't really even play around with those. I remember at the beginning of the pandemic back in March last year, everyone was thinking the world was coming to an end. The stock market was going down, and I talk about this all the time that I hopped into SPXU and I lost a lot of money in that. And I really learned my lesson, just like all the tools out there aren't necessarily tools that, we have to use. Just keep it simple. Um, Let me see. Covered calls are where the finisher institution covers the amount. The no, covered calls are where you, the person who has the stock, a certain amount of however much of the stock that you have, however many shares, you're basically writing a contract to someone saying, "Hey, I'll give you the right to buy my shares at this price by a certain time and date." So as the writer of that contract, you don't want that. that stock to hit your strike price. You just want it to expire worthless, but that person already paid for the contract, which is what we call premium, and you keep all the premium. What about ABB? What type of company is that? What's up, Taha? Thanks for all your help. No problem, Ken. Thank you for tuning in. I appreciate it. Okay, everyone. You guys have a good night. I appreciate everyone tuning in, and I look forward to where we're really going with this channel. Also, on Wednesday, I do have another. I hope I can get this video out by Wednesday, but on Wednesday, if I don't have a video out, it's because I'm going to be filming a video with someone else. And this is also another kind of thing that I had an idea of, is basically, and this sparked from speaking with everyone over there at the Voice of Many, just to have a more dialect as far as not just into stocks, but just into more things in just like the financial realm. So I will be bringing a guest on the channel. It won't be live, it'll be pre-recorded as well, but we're going to be talking about um being a notary, and like things that you can do to improve your income, because more important than what you invest in, I personally believe, is your income. Is like, Dave Ramsey says all the time, is your biggest wealth building tool. So I think that's super important. So I just want to shed more light on like things people are doing to be able to increase their income and be able to invest more ultimately. But more important is how I feel like more important is how good you are at what you do, and how that can really drive your income to speed up your investing. So we're going to be talking about things in like a more holistic sense on Courtside Financial. Charging stations for cars and buses. Interesting. Let me write this one down. Definitely check that out. ABB. JGB Renovations. Thank you so much for the super chat. I appreciate it. Thank you for the $5. I really appreciate it. You didn't have to do that. Thank you. Okay, I'll see you guys tomorrow.